Thanks for joining us. I'm Marlon Bowling with you as we take a look at our ag commodity trade. And we're going to bring in Brian Hoops of Midwest Market Solutions in Springfield, Missouri, and talk about our ag commodity trade as it stands right now. Brand new information just coming in off the wire a moment ago. It's from USDA, and it's delayed by a day because of the legal holiday yesterday. So it's our export inspections report, and we have those numbers for you right now. On the corn, we had a total this past week, and these are shipments that actually left the country. These are not sales, these are actual shipments. So corn came in at 1.35 million tons last week. That compares to the previous week when we had 1.37 million tons. And sorghum 61,000 compares to the week before when we only had about 2,300. Soybeans, 569,776 this past week. That compares to 630,000 the week before, so a little bit down there. And the wheat, 423,270 tons, and that compares to the week before when it was only 371,991. So an upward momentum in the wheat. Soybeans were lower, and the corn about the same, just slightly under what we had the previous week. So, Brian, let's go ahead and we have those numbers now. Let's take a look at our futures trade, too, and see what's going on in the grain trade. Currently, you have the corn market a little bit weaker today. We're down about 2 1/4 cents, 3.64 1/4 per bushel right now. And if we scan over at the soybean trade, soybeans on the nearby November contract are now down 6.5. We're at 8.63 1/4 per bushel, well off our overnight high by about 9 cents. And we have January down 6.5 too. Meanwhile, if you look at the wheat, we have the Chicago December wheat contract up a penny at 5.15. On the Kansas City market, we have that December contract now trading a penny higher there at 5.18 1/2. Brian, what's driving the markets here today other than just kind of biding their time ahead of the reports on Thursday?
Right. It's been kind of a quiet news couple days here for corn and soybeans. We've dialed in a lot of the rain that's moving through the plains and the Midwest already and have rallied up into some technical resistance. Now we're starting to look ahead at drier weather forecasts for next week, and that should allow producers to get back into the fields. Plus, you've got the supply and demand report out on Thursday. That is expected to be a little negative for both corn and soybeans. We could see an increase in our carry-in numbers, thanks in part to the quarterly stocks report that came out at the end of September. We expect to see a small yield adjustment on the upside for both corn and beans, and then that would leave you with ending stocks slightly larger than last month. So it's a little negative report on Thursday, but the wheat futures have tried to climb here. We had an export announcement of 120,000 hard red spring wheat to Bangladesh this morning, and there's some newswire reports that Japan is also looking for U.S. milling wheat. We've had a real big wheat crop this year, so we have some exportable supplies. Normally it's kept home for milling and baking purposes, but we can export some of that wheat now with the big supply that we had last year.
Very good information. Thank you for sharing. Brian Hoops is with Midwest Market Solutions. We'll pause for a quick little break. And when we come back, we'll see how the cattle and hog markets are performing on a Tuesday when we come back. Well, what do you say? Let's go back to our talk that we have going on with Brian Hoops. He's with Midwest Market Solutions in Springfield, Missouri, and talk about our livestock trade as we're setting up here in the middle of the week. So, Brian, let's take a look at our live cattle futures and our last quotes that we have available here. So on the live cattle trade in Chicago, we have had a weaker tone here today. We had December actually trading $1.10 lower at 117.17, and we had February down $1.17 at 121.70. On the feeder cattle side, let's take a look over there where we currently have the November contract a dime lower at 158.32, and January down 17 at 154.60. So a lot more pressure, Brian, in the live cattle versus the feeder cattle trade. Can you explain the difference there today?
Yeah, feeder cattle getting a little support because of lower corn prices today. Live cattle are setting back. There's a lot of sentiment from some of the traders that maybe cattle futures have topped in the December, February, April contracts. Maybe have peaked out last week when we had the sharp rally. Technically, we've not been able to sustain any type of gains, even though we have show list numbers that are smaller than a year ago levels when the USDA has been suggesting that show list should be 5% larger. In addition, all this rain and some snow in some areas making those feedlot conditions really poor, and that's going to affect the performance rate of gain for cattle. So we've seen the October gain on December quite a bit. I think you continue to see October be the most supported contract here because of expectations that cash trade should be better this week. We didn't have much in the way of strength last week, kind of a steady type market. I would look for at least $1 better for cash cattle this week.
Okay, I want to talk to you about the lean hog market. And on the lean hogs here so far today, let's take a look at our current prices here. Right now, we'll start with that October contract, which is just 7 cents lower. December down $1.87 at 55.67, and all the deferred contracts are at least $1.50 lower. And that means that spread has widened out even further between the October and that December contract. That's just crazy how wide that spread is there. Is there going to be anything to force that to draw together?
Well, when the market gets in closer to its expiration, that's October the 12th, so end of this week, October futures have to align itself with the lean hog index. And so we may see some movement against the October contract as it tries to go near the index. The index is at 69.31, so unless the cash market really weakens, that index should stay pretty firm, and that's going to be a supportive feature for October. December is getting very cheap compared to the index and compared to where the October is going to go off the board at. You may see a little support as a result of that, but the product market's starting to weaken under the weight of some really large slaughter numbers, and that's probably going to keep a lid on rallies in that December contract.
Okay, well, thanks, Brian, for talking with us. I appreciate that very much. Brian Hoops is with Midwest Market Solutions in Springfield, Missouri, where I assume it's going to get a little bit damp here this week.